Here's a chart of an Australian stock. It's the Australian Agricultural Company, ASX code AAC, and I just wanted to take you through what I think is a pretty good looking shorting opportunity on this particular stock. You're looking at a daily chart, and you are actually looking at over the last few years or so. Quite a condensed chart there. But what we've seen in this particular case is, and I'll just move down so you can see the date there. There's the date. Over the last couple of years or so on this particular stock, and what we've seen, of course, like so many companies, is throughout 2008 this stock experienced very, very strong falls, like, as I said, a lot of companies, and certainly in the second half of last year it fell quite strongly. Here is the second half of last year throughout here, and now we're looking at the last 6 months or so, and I think the significance here is that what we've seen in the general market is that over the last 6 months, so certainly the first half of 2009, which if I just draw a line for you, there's the beginning of 2009 on this chart. What we've seen in the, certainly in the Australian market, a lot of equities markets around the world, is incredible strength in the first half of 2009 after the significant falls of 2008. And here's a stock that really stands out because during that time, while so many companies have experienced strong gains, here's one that's literally at the beginning of this year, it's now almost, certainly a good 25 to 30% off where it was at the beginning of this year, and has in fact been half its price since the beginning of this year, back down to this sort of dollar level. I'll just get rid of that line there to show you the beginning of this year. But to me, the significance of this is this support level down here at around $1.15, $1.10, $1.20, and what we're seeing here is almost a very, very large descending triangle, where we've got the support level at a similar spot, but at the same time, if I just draw a sort of rough line through there, at the same time, the highs that we're achieving are getting less and less and less, and now I wouldn't be surprised at all to see this sort of just roll over and again test this sort of really strong support level through here at around $1.15 or so. The significance of this sort of pattern, the descending triangle, is the fact that the support has remained quite constant throughout this extended period, and this period here is roughly around 9 months or so. But at the same time, the bears, the people willing to sell, the selling pressure, have become quite aggressive and been able to eventually, slowly but surely, force this price down. And you know, if we saw this price sort of move back to $1.50 but then fail to move through what is probably going to be a nice key level, we can see a fair bit of support there at $1.50, can't we? See through that level there where we've seen a fair bit of support, the price bouncing off numerous times that key level, and again now we've seen it bounce off and fail to get through. And if we again saw that come back down and test this support level, really just reinforces the strength of the pattern that we're seeing here. And the real key level for me, of course, is the support level. And if we broke down through that good support level there, then really you can see the downside potential is quite significant, because we'd be looking at its lowest levels in several years. And there's a sort of pattern that we've got forming there. And we always say that maybe it's too low a price to short, and there's not much downside potential there, but of course it doesn't matter where you start at, the price can still lose 100%, and I think it's easy to, it's stating the obvious, but it's easy to sort of not consider that, and we think, oh, well, it's already lost so much, it's already been up at $4 now to $1, surely the potential to short this, we've missed out on that. But as I said, it's stating the obvious, but it doesn't matter where you start, you can still lose 100% of its value. And if you're trading obviously a synthetic product, a derivative, and you have that leverage there, then that's still at 100% fall, or a large part of that can still result in significant gains. So that's the sort of pattern setup that we're seeing here on this particular stock. Certainly key support through there. The sellers, though, they're being quite aggressive, and that's why this descending triangle pattern is quite effective. The support is remaining quite constant, very passive, not being the aggressors, but clearly the bears are being quite aggressive, and it's pretty clear when we sort of reach this point down here which side is likely to gain the ascendancy. Not guaranteed to, but you can certainly see that it's the bears that are quite likely to gain the ascendancy. And if we break back down through this key level, I think the worst is certainly to come for this particular stock.